All right. It's like we're live. So welcome to the stream. This is Trading Homework. I'm your host, Jon Tait, and it's February 4th. It's evening time. The markets are closed. Prices aren't moving. What you see here, I have a paper trading account open at Interactive Brokers to do these broadcasts. I'm not actually doing any paper trading in it. I'm just using it to build options strategies and help with research. So in tonight's broadcast, I want to go over I want to retrospective what we looked at yesterday. So today was Thursday, and so day before expiration, or DBE, opportunities is what we were highlighting on yesterday's show. And so we're going to revisit some of those trades or trade ideas, the options combos that we were looking at, and then take a look at. I wanted to get to GameStop yesterday, and I didn't get to it, so we're going to take a look at that now. And what's nice is it's Thursday at the close, and we can look at what kind of prices you could get near the close for all these options. So the other thing that we may do tonight is build a watch list. We might get the FinViz screener out and go through that. That might be a fun activity to do. I try and do that at least every weekend, and sometimes more often than that. I haven't done any of these broadcasts on the weekend yet. This show's still really new. One other thing I'll mention, if you're watching this not live but as a recording, you can increase the playback speed, and that might make it easier for you to digest all these details, and you can pause it and slow it down if something really catches your interest. I'm going to try and talk out loud about what we're looking at and describe it for people who aren't able to watch their screen the whole time, and so that way there's still material in here for them too. All right, so let's get started. Yesterday, I have Tesla options chain open for with the expiration of tomorrow, and one of the options combos we were looking at was it was a 950 1,000 bull call spread, so pretty deep out of the money, and when we were looking at it yesterday, I think it was 25 cents. And it turns out at the close today, because Tesla was down 1% today, down $8, this spread got cheaper than what we had anticipated. So the anticipated prices we were going on was if Tesla didn't move at all, if it stayed the same, then we had a little bit of an estimate maybe about where that might be trading. So rather than buy this for 8 cents, let's take a look at that. I'm popping it up in the builder here, and I'm sorry, this is the performance profile. And so as you can see now, the probability, because there's one less day on it, it's very, very small probability of profit on this. However, I will say this profit probability number comes from if you hold it till expiration. Probably what will happen is this curve will start pulling down the closer you get to expiration. So wherever the price is, if the price is at 940, for example, the option you're long is out of the money, and so at expiration it'll be worthless. But before then, there's still some time value, because there's a possibility that it might be worth something. So as of the close, this spread at $940 would have been priced at approximately $9.14, which is $914, like what we're seeing on the graph. I hope everyone can see that okay. So what I ended up getting was and I think I just bought one, because I spread some money around on a number of things, and I'll just kind of go from memory and look at some of the ones I did get. I think what I got was the 920 And so one of the things we're looking at here is, I think I got a 920 call. It was just like, I don't even think I paid $36 for it. I probably tried to get it near the midpoint. And so one of the things we're looking at is the option open interest. And so where there's a lot of open interest, you can sometimes get better liquidity. So instead of paying the full ask for this option, you can try and bid it at midpoint and maybe gradually bump up your bid. And if you're lucky, the market won't run away from you. It tends to not so much in options, but it can. There are some market makers that are creating these bid and ask spreads. Their computer isn't really responsive to people putting in bids. Instead, it's just looking at their price to hedge and how much they can potentially make off of it, and also where the competitors are. And so these tend to be fairly competitive, and so they don't tend to run away from you that much. If one player backs off, there's another player right there. And that's because these options get their value from a lot of factors. And so some of these are the factors. The Greeks, there are more factors than that. Anyway, let's look at the one I did get. So the bull call spread we were looking at yesterday was priced around $25. I think what I did is I just bought I bought a straight up call, an outright call instead of a combo, because what happened is, because Tesla price went down, the option chain just really kind of collapsed in, and there wasn't much value out here to make these options further out of the money worth much. When the implied volatility remains high, then you can use bull call spreads. And we're going to look at GameStop a little later. That's got a sky high implied volatility, and so if you want to just put a nickel into the game, or $25 or $30 or whatever for a long shot, then you can have a much higher probability of making money by using a vertical spread. But on this one, I felt like 920 is actually like reasonable chance of hitting for the amount of money that it cost. So when you look at the outright, let me go to the performance profile here. This is the profile of an outright. So if Tesla goes up 20%, I think that's really like pushing it. That would be wild if it did that. But that one option contract I bought for $36 or $30 or whatever it was, it'll be worth around. It could be worth as much as $9,500 or maybe slightly higher because of a rise in implied volatility. So that's the kind of power you can get with these things as you get closer and closer to expiration. And so the vertical spreads we were looking at yesterday, those opportunities were available 2 days before expiration. You can still get a really powerful punch. And so when I tweeted about this yesterday, when I announced the topic for the broadcast, I used the Giphy for Bruce Lee doing the 1-inch punch, because he barely has any motion, but the force of the punch he's doing is incredibly powerful. And so you could think of this kind of trading is very tactical, using pressure points. And the other thing that I need to mention about that we covered on the broadcast yesterday, and I want to mention it tonight because many people may not have seen the broadcast last night. I just popped up the Tesla chart and put it front and center on the screen. And we're seeing that Tesla is 4 weeks into a flag after a nice rise. It's just hovering in a tight range. So there's a pattern of 3 weeks tight. I think William J. O'Neill writes about that one, I think is where I read that. His book, How to Make Money in Stocks. The fourth edition is fantastic. The first edition I read was the third edition, but the fourth edition way even better because he's got a lot more updated charts in there. He's just packed so much more goodies in there. Maybe he'll update it again. I don't know. It may already be updated again. Anyway, when we zoom in on the daily chart, because Tesla's been going sideways for 4 weeks in a really tight range, what that has done is it's brought the implied volatility down on the stock, and so it's made this kind of option very cheap. And so that's one reason why I like it so much. So when I do these kind of plays, I'm looking for a place where typically I'm looking for low implied volatility or just a cooling off period has happened for a rising share price. Maybe there's a base there or a really explosive looking chart pattern. I'm not just a technical trader. A lot of my emphasis is on when I have an idea, I want to express that idea in a very powerful way. So, I mean, with technical analysis, I use that, but I don't just use it. So there's a lot of ways of trading that just sidestep technical analysis, like momentum trading, for example. What you could do is you could go and look at the constituents of an ETF like MTUM. And so this is one way you can get a similar portfolio to someone who might be using technical analysis for swing trading. Let me look at their holdings here. So MTUM is the momentum ETF for iShares. Their holdings are, look at that, number 1 holding, Tesla. Number 2, Apple, Microsoft, Amazon, NVIDIA, PayPal, Thermo Fisher Scientific, that's TMO ticker symbol, Adobe, DHR, and Alphabet, which I know that as Google. The Alphabet name to me is ridiculous. Anyway, if they want to be called Alphabet, that's fine. I'll go with that. But I typed Google into my search bar, so it's in the ticker symbol still says Goog. So I look at the ticker symbol more than I look at the company name. So that's why to me it's known as Google. Anyway, there are ways to back into some of the same kinds of trades that technical traders are in. And so I've just shown one way, is just getting into some of these names and try and buy them when they're down. And you're going to be doing some of the same kinds of things that similar kinds of trades like technical traders. And this one to me, this looks like a false breakout here in late January, where it made a new high. It had this false start. We saw a similar thing recently with silver, where it on Monday had this breakout that completely reversed. So this, to me, it really looks like Tesla could be rolling over. So what I could have done, and I didn't do, but probably I should have, was go with, because I was buying an outright, I probably should have bought an outright put as well. And the way to do that, if you want to do that, you're probably better off if you put it into a combo and try and get filled on the combo instead of buying each one separately. Unless the spread is a penny. If the bid-ask spread is a penny, then so what? There's no advantage either way. But by putting it into a combo, what you're really saying is, if the market for this option is tighter than it looks on either one of the legs of the combo, or some people call it strategy, I like to call it a combo, because to me strategy means something like more than just a trade. To me, a strategy is bigger than a trade. A strategy might be a type. Like this is strategies. Strategy is like a box or a butterfly, but I build really dynamic combos a lot of the time, so they don't necessarily fit into these strategies. But this one right here is a strangle. You can see that it resembles the picture here. And this one, probably this is what I should have got instead of just buying the call. So if I could have filled at 60 cents, that would have been great. I would have been pretty happy with that. The commission's higher. It would have been just pocket change to put this trade on, and big potential. So let's narrow the range here a little bit, because we're only talking about a day. 10% is a huge move in Tesla, and so that pocket change turns into a decent amount. But by the way, like this type of trading, I am not using hardly any capital at all. So I mean, this is really kind of a sideshow, but I wanted to cover it on the show because I think it's a really important kind of trading. And I see people doing reckless things with their money and trying to make huge gains. They're plunging big time into stocks that are up already 100% in a day, and they're plunging in hoping it's going to go higher, and they're putting a ton of money at risk for the chance at big upside. And so what I'm hoping to show here is that you can give yourself a chance to get huge upside with just tiny amounts of money. And so this is a good segue to move over to GameStop. So let's do that now. Okay, and we're going to look at, again, the options expiring tomorrow. And GameStop right now is, look at this implied volatility, the close, 378%, or 343% IV last. I mean, it's huge. The historical implied volatility, 500%. I mean, this thing is wild. I almost bought some 60 puts when it was like 300, but I didn't because I don't really want to be on the wrong side of this. Like Tesla going down because people who are holding it are selling. Like that's one thing, but I've been tuning into Brian Jung's podcast, and I'm rooting for these guys. I'm not trying to take the other side of that. So I didn't really buy puts, or if I had a put, it was just for hedging along. It may be like if I did it as part of a straddle, then I'd be better. I'd feel better about it. But that wasn't the trade I was looking at. I was just eyeballing that 60 put, and I think when I was looking at it, I mean, it was so cheap. Let's take a look at that real quick. Charts, new chart. Looking at 15-minute candles. It's probably around the price range I was looking at it. What price is that? $2, $2.50. So this would be up like 4 times the money, but I mean that's not crazy for options. So it would have been a winner, but and I think tomorrow it will be projected to be way higher. But we'll see. I mean, if Tesla goes lower, if Tesla goes, or I'm talking about, why am I talking about Tesla? GameStop. If GameStop goes to, say it closes at 40, well, this put should be worth about $20. All right, but enough about that. Let's talk about the long side call tactics that we could have used. We didn't look at any yesterday. And so if you watched my show yesterday, then we hadn't prepared any material for GameStop, but we could have used the same concepts we talked about and put something together near the close that could have some big upside. So let me get GameStop open on this chart window. I always look at the ATR. ATR is 71 points. This is the daily ATR. And so I don't know that we could expect it to be up more than 100% in a day, but 50% moves are happening in this thing all the time. So 50% higher puts us in the $70 to $80 range. So it's just helpful to have those levels in mind when we're looking at these call spreads. So as you can see, a $75 call, that's 50% higher on the price, and that's pretty darn expensive. For one of these contracts, you would have paid at the close $176 for it. And so I realized that we're doing what we're doing. I'm going to just call it out. We're doing a retrospective right now. We're not so much planning for tomorrow. So this option, I mean, if GameStop goes up 100%, I mean, you'd need it to go up 100% to make a lot of money. I mean, that's just ridiculous. So let's put the range at 60. And I mean, you're not even going to be making 10x if this thing goes up 60%, which is so unlikely. I can't believe the profit probability on this thing says 13%. That just sounds unbelievable to me. So I don't like this. So this kind of trade, this is not a Bruce Lee 1-inch punch kind of a trade. I'm not going to put my approval on that. This one doesn't get my stamp of approval. So let's. I do like how deep the open interest is here, though. So let's look at something closer to the money. Let's look at. How about this? A bull call spread. Oh, hang on. I need to go into the strategy builder. Let's drop our combo in the strategy builder instead of the orders window. So really big open interest right there at the 70 strike. I like that because the bid-ask spread, it looks like it's 10%. And it should be competitive. There should be lots of competition. And so we should be able to get filled closer to midpoint than on some of these oddball strikes. This kind of stuff's really important. I don't know what trading apps you guys are using if you're doing all your trading on your phone and they don't even show you a two-way market. If that's the case, then I hope this is opening your eyes to a better way to trade or to what you can get from a broker that offers these kind of tools. All right, here we go. I've got a bull call spread put together here. And now if you notice, 37 cents. Let's look at the minimum investment here. It says $82. So what this is it's calculating the ask. I don't know why it's not showing the ask here. It should, but it's calculated the ask to be around $80. There will be a commission here. I don't know why it's not showing that either. And so the max percent return is 500%. So as you can see, like this still doesn't have anywhere near the juice as that Tesla trade we were looking at for really in the same price range. And so I didn't put on a GameStop trade for tomorrow because, I looked at this graph and I didn't like it. However, let's look at what we can do. I mean, say that GameStop does make a 100% move, and we want to take a flyer on that idea or that possibility. Well, here's what happens there. We're going to try and look at a similar price range here. Again, we're trying to keep this under $50 for this kind of trade. If you have more capital that you want to put into an idea like this, we looked at some other combinations yesterday. I'll flash them up on the screen, and you guys can explore these. You can pause the video and take a look. These were the Tesla combos that we were looking at yesterday. So some of these are we have a straddle, we have a strangle. There's some fairly complicated back spreads and ratio combo kind of things on there that take more capital. They have a lot less percentage return, but very limited downside, very high probability of success compared to the kind of option trades that we've looked at so far tonight. Anyway, all right, back to the idea we were working on. So we want to try and take a flyer on GameStop being up 100%. Can we find something that's more competitive than the option combo we were just looking at? So the other one was pretty narrow. It was a 5-point spread. it looks like we can build a spread in the similar price range that's 15 points wide up here. Yeah, look at all this open interest. So when I look at this and I see these two asks so close together, it makes me want to go with the one that's 5 points higher. I'll show you why. We'll compare them both. Like this one has so much more profit potential for just, pennies more. Okay, so let's widen out the range that we're looking at to 100%. It doesn't. It's not even going to show it all. But so now we're talking about potentially thousands of percent return. If GameStop closes above 105 tomorrow, we can expect that this position will be worth $2,000. So we'll have bought it for hopefully somewhere close to the midpoint of 13 cents and 70 cents, and potentially it could turn into thousands of dollars. So these kinds of trades are fun. They're a really useful tool to have at your disposal. And another tactic that I showed on last night's broadcast, I want to highlight it again because you may be rolling an option and you may be rolling something on Friday or on Thursday. And if you are doing a roll, you can add this in on the combo builder. You could potentially add this into a trade you're already putting on. And it can help you get liquidity, because if there's liquidity on one of these strikes, someone's trying to get out of it when you're trying to get in, or someone's trying to get into it when you're trying to get out. Like in this case, I'm trying to sell this one. If someone is trying to buy it, if I come in near the midpoint, we may meet and transact. And if one of your legs matches that criteria, it will give you a better deal on the whole combo. So adding these kinds of trades to your options orders can actually help you. You can pick up these kind of combos for free sometimes. It's paid for by the bid-ask spread because you're competing at more strikes. There's a segment in the book, Options as a Strategic Investment. I'm going to do a whole show on that book. Maybe even this weekend. I should do that show soon, where the author talks about using the combo builder instead of putting on each leg or doing a roll. If your broker gives you a roll tool, if you use the roll tool, you can have much better fills. And so this isn't just me saying this. This is coming from the author of what is regarded in the community as the options Bible, at least for traders like me. If you're on a derivative desk or something, it's maybe that book is a helpful thing, but I mean probably there's other books that you're reading besides just that one. I don't know what the Bible is for derivative quants. So I'm not going to speak to that, but as a position trader, Options as a Strategic Investment is a fantastic book. So let me give an example. Is say I wanted to buy an at the money GameStop call for 3 weeks out, for example. Where is at the money? $50. Say I was already going to buy this option. I can put this combo in and try and get filled like that, and try and get filled near the midpoint. And if there's competition at these at the money, with these expiring soon strikes, it may help me to get a fill. I may get like a better deal on this one. So. One thing I'll call out, though, is if you look at this one by itself, the bid-ask spread is 17. bid and 1790S, so it's 90 cents wide. If you look at it here, it does get wider. It's 1713 bid and 1860 for the combo. Let me get a calculator open and let's actually take a look at this. So the midpoint here would be 1745, and the midpoint for this wacky combo that isn't even a real combo, it's what it is it's a at the money 50 call with 3 weeks to go and a lottery ticket baked in. 1860 minus 1715 by 2, 73 cents. The midpoint is 73 cents away from 1713. So if you fill out the midpoint here, it's really close to the ask on this one. So maybe it won't be all that much better of a deal, but it does have a free, I shouldn't say a free, but a really cheap flyer baked in. All right, let's keep moving. By the way, I'm not recommending any of these trades. This is a retrospective. Thursday came and went. Tomorrow, all these options are going to be at completely different prices. And what you expect to see is on the options chain here, as we're going further out, these are going to start like getting real close to zero, and the further the day goes on, it'll just be drying up. It's getting closer to zero as you roll up as you scroll up the options chain. Assuming that GameStop isn't really going anywhere. If the price is moving, then different story. Okay, so the other thing I wanted to talk about is for when it comes to our retro, is I want to look at some other stuff that I put on. So NVIDIA has a really great looking base right now. Does it look imminent to break out tomorrow? Not really, but it could. I think earnings expiration is still a little ways. I'm sorry, earnings report, not earnings expiration. Earnings report is still a little ways off. So if that's the catalyst that this thing is basing and waiting on, then there's still plenty of time. So I'm just going to rifle through a few charts. The ones that I recall buying some of these flyer trades on. Another one was AMD. The reason is when I was in Micro Center, which is like the computer parts store, computer parts superstore in St. Louis. They're big AMD fans there. The people working there. I had a conversation with the staff, with some of the people that are building computers for people, and they said that. AMD has some really competitive graphics cards with NVIDIA, which I was surprised to learn that. I'm not reading graphics cards reviews regularly or anything like that. I used to, but it's just not something that I've looked at in a long time. But anyway, they were saying that AMD has some really great cards, and they get a new shipment of NVIDIA cards in every single day, and they sell out. The guy was telling me, I mean, this may be news for traders because a lot of them may not be clued in on this, but the guy was telling me that people are buying NVIDIA cards at that store and they're turning around and flipping them for $1,000 higher if they're not putting them into their own machines. So these are the brand new line that came out from NVIDIA. And there's a line outside the store. When I went there, there was a line out front. I got there 30 minutes early by accident because they didn't open until 10 a.m. and I didn't know that. I just rolled in the morning, and so I waited outside for 30 minutes, and there was a huge line there. And I was asking people, "Hey, what are you guys in line for?" And they were saying it's for computer parts and specifically graphics cards. And I asked the guy at the store, well, how often is that line there? He said every day that those shipments come in. I think there's they don't come in Sunday or Monday. I think it's Tuesday through Saturday is when those shipments come in, or maybe it's Tuesday through Friday. I don't remember. If it matters to you, you can call them up and they'll tell you. But so that is a really exciting catalyst. Some on the ground, I don't know, Motley Fool research or something that I was doing on NVIDIA, because I've been rolling combos in NVIDIA for some of this base. I don't remember the exact combo that I have on right now. It's pretty aggressive, but I did put on a Friday, I'm calling it a DBE, day before expiration. I put on also, in addition to the combo I already had, I put on a day before expiration trade in NVIDIA. I did not bother with buying a put on this one either. I just bought the call side. I don't remember exactly which one I got, but let's go in and take a look at what we can. Let's do it this way. I don't know why it's not giving me the little pop-up box. So there. I think it might have been this one, the 560. And you can see there's huge open interest here. And this is so liquid. And NVIDIA also has, not as much as Tesla, but the average options volume daily is big in NVIDIA, 179,000. Option contracts are trading daily on average in NVIDIA. And whereas with Tesla, it's just under 900,000 contracts. Still super liquid. So let's take a look at the 560. I'm going to look at a smaller range. I'm going to look at a range of 30%. Because I think with that base that's setting up, 30% move, it's possible. So for a price of $52, I actually got it for less, I believe. So the bid-ask spread I'm seeing on screen is bid 38 cents, ask 50 cents. I think I got this one for 44 cents or something. I don't remember the exact price. And that doesn't really matter. These are just, they're throwaway trades anyway. So looking at this, if NVIDIA's up 30% tomorrow, then this contract is worth just about 15 grand. So that's the kind of power that you can get with these kind of trades. But again, like the probability of this happening is so low. I don't know why this is saying a 5.7% profit probability. Don't believe that. I don't believe that for a second. This profit probability calculator, it's just a guess. It's coming from some of the same kinds of modeling and math that the market makers are using to set the prices for these contracts. And so if you think that this is accurate, you probably should never trade an option, because the market makers are using some similar math, and they're setting prices where they're going to be making money. If they spread out enough bets and those and their calculators are accurate, then they're making money, and they're making little bits on every trade. And they, sometimes they're going to have a loser that's where they sold an option for $50, and then they have an obligation to come up with 15 grand, but it nets out for them over, they've probably sold so many other options that, coming up with the 15 grand on the few oddball losers pays for it, it's already paid for. So if you think that this calculator is always accurate, you probably should just never trade an option. Let's keep moving. Let's move through. One other thing I want to talk about with NVIDIA before we jump is because this base is so long here on NVIDIA right now. It's like 1, 2, 3, 4, 5. It's a 5-month long base, And this may break out and start running before earnings. I think earnings are later in February, or maybe it's March. We can look it up. Let's look it up. This is a research brainstorming session. Earnings, where is it? Earnings date, February 24th. Yeah, so that's still a ways to go. That's about 3 weeks out. It's in the third week out, not including this week. What I was talking about with AMD is AMD late last year, or maybe it was in the middle of the year, it broke out before earnings and had a big run up ahead of earnings, and then I think when the earnings came out, it gapped up and ran even higher. I caught a piece of it, but not the whole run. So the implied volatility, getting into the earnings week, you're going to find that those contracts have they're much more expensive in the earnings week. So the implied volatility, it's starting to come up because of the approaching earnings, or maybe it's about to break out, and so the implied volatility is rising from that. So a few other good ones that I've been following with a similar pattern. And look, it's almost the same chart, DocuSign. This has been basing for a long time too. This one looks like it may stay in the base a while longer to me. It's not necessarily true. I don't know what's going to happen. No one knows what's going to happen. But I mean, just to my eye, from a technical perspective, it looks like a choppier base. It's also kind of generally rising, whereas the NVIDIA one is not. This one's going sideways. It looks like a stronger base to me, but I could be wrong. It may be that we look at this in 6 months and DocuSign outruns NVIDIA, and that I was wrong about that. Look at this base right here. In late 2019, really neat base. This kind of looks like what Tesla's doing right now. Had a run like this, and then it's just been going sideways. So just be aware that just because there's 3 weeks tight or 4 weeks tight doesn't mean it's not going to be like 8 weeks tight, but it could get really explosive after that. So DocuSign, similar thing. What I want to call out on DocuSign is, okay, it's not going to show it here, but the average options volume daily, it's really low. It's like 15,000 contracts. Really low compared to, it may be up to 30, it's somewhere between 15 and 30,000 contracts. I wish it was telling us the exact number, but the point is, even though the share price is liquid, it's doing all these like millions of shares a day of trading, or is that weekly? Yeah, millions a week. And it looks like the stock's real liquid. The options may not be super liquid though, and so you have to look at that, because otherwise you can find yourself in a situation where, yeah, maybe you got filled at the midpoint to get in, but no one's there when you go to, if you try to roll or get out, and so you've got to sell to the bid, and you find I find that I'm paying the bid-ask spread, sometimes the full bid-ask spread on some of these names that have very low option average daily volume. And another way to look at that, if you don't have this average options volume column at your broker, is your broker's going to show you the open interest at these strikes. So it's another reason why I keep calling it out. So here we are at Docu. By the way, when you see me on the camera, I'm like looking around all over the place. I have like this huge, giant dual screen setup, and so I've got a lot of screen real estate, and so that's why it looks like my eyes are darting around everywhere. So 1 day till expiration. Yeah, see how these option open interest is only in the tens or hundreds, and so that's different from a lot of these ones we've been looking at where it's in the thousands. So if it's a contract I'm putting the trade on, and I don't intend to sell it later for a loss. In other words, like if it's a win, then I may want to sell. But if it's a loss, then I'm just going to let it expire. So we look at this 255. This is probably the one that I bought. Yeah, there's some good juice there because again, it's been basing for a while. The stock's been really calm. So to call it out for people who are just listening in, I'm looking at the DocuSign 255 call, and the minimum investment shows $40. You're probably going to pay the ask on this. I don't know that it's going to be super competitive trying to if you try and get filled near the midpoint. But, I mean, you should still try. What you have to watch out for on these less liquid ones is if there's only a market maker in there who's got an algorithm that will run away from bids. It'll pull their ask away from bids. If there's not competition at the ask, then that ask can run away from you. So for $40 minimum investment, if DocuSign's up 10% tomorrow at the close, then this contract has a profit of $1,500. At 20% rise, it's close to $4,000, and at 30% rise, it's close to $6,400. So I mean, a lot of bang for the buck. But again, like, don't believe this profit probability number on this. The profit probability on this is like, I don't know why it's showing 8.5%. It's really probably closer to like 1 in 100 or 1 in 200, and you may make a little and not these eye-popping thousands of dollar profit numbers. But if you're doing things like pouring hundreds or thousands of dollars into AMC shares because you're trying to like double your money or make 3 or 4 times your money, you should consider maybe learning how to do this properly, and maybe do a little bit less of throwing thousands of dollars at very volatile stocks at high prices, and maybe look at doing a little bit more of this kind of trading and save some money. So I mean, the profit this could potentially make infinity. I mean, but the odds of it making infinity are 0. But say there's a takeover and DocuSign is taken over. Well, if you put on a handful of these every Friday, or I'm sorry, every Thursday, you have to put these on Thursday, and you can get a similar return by putting on some of those bulk call spreads like we were looking at on Wednesday at near the close. And then you've got 2 days of action to go. But probably what's going to happen is the bulk call spread is going to burn up on Thursday, and again, it's just as unlikely to happen. So anyway, I'm trying to get this subject out of the way because there's so many other things that we need to talk about on this show. But I feel like this is a kind of a timely topic that people who are trying to make a lot of money fast, this is probably like helpful information for them. If you're to get exposure to this, a lot of people have never even seen this. Like, oh, people make money on options, but how are people making so much money on options? Well, I mean, this is a way. When people are making fast money, like, this is a way that they're doing it. All right. Some of the other ones I got today. QS, I featured this one on the broadcast last night. I think we can maybe skip looking at all these calls because you probably get the idea by now. The point is, this looks like a pretty explosive setup for me, to my eyes, when I look at this chart. If you look at some of the moves this thing has made in the past, it kind of reminds me of Nikola, just the way that it's been moving. I didn't put a trade on a Nikola. Maybe I should have. I mean, this one looks like maybe it's got some room to run higher. Maybe like it's carving a bottom or something here. I'm not sure. I don't know that this is a good investment or not, but I do have a position in GM, although I think I'm going to rotate out of it. I think what I wanted to do is rotate my GM position to ACB, which is Aurora Cannabis. I already have Tilray, and I have what's the other one? CGC. And the way I have done these trades, these are not the 1-inch punch trades. These are the swoosh trades. And so if you don't know what the swoosh position is, go back and watch yesterday's video. I talk about the swoosh trade in there, but it's essentially we'll just put one together. I may as well just show one on this. So let's look at ACB, because this is one that I would be, this is one I need to research, because I don't have a swoosh position in ACB, Aurora. So let's go to ACB. Sorry, there's so many like buttons and switches and dials. When I'm talking, I can get turned around. Okay, so the idea behind the swoosh trade is we're going to go out 3 to 6 months on the calendar, and we're going to build a combo where what we're doing is we're buying an at-the-money call. ACB is 13. Actually, let's not use the 14. Let's use the 13. And if I look at just this call, something I want to show you is, so we're not there yet. We have more building to do. But what I want to show you is, we fast forward on the calendar like a month. There's not much time decay if Aurora Cannabis doesn't go anywhere. It's only if the option price falls is there going to be a bunch of time decay. So you get hurt on the price, and then you're in a position where your option is out of the money, and it starts to incur a heavy time decay penalty while you're still trying to carry that position. So you're fighting back from a losing position if it falls. And so one of the innovations that I'm doing here is I'm going to modify a synthetic stock. If we do this, it's a synthetic stock position, which means that it moves up and down just like the stock. It takes maybe similar or slightly less margin than just buying the stock sometimes, depending on how you structure these. I don't really like these synthetic stock positions, though. You can hold a stock cheap by paying for these at short-term duration. It might be fun to look at GameStop. Like, what if we bought GameStop using a synthetic stock position, and we did it with 1 week to go, and we just rolled that? I wonder what that would look like. Or maybe with 2 or 3 weeks to go, and roll it like that. But so let's go back to the swoosh trade, though. And I'm going to get rid of that leg because I don't want it. What I want instead is I want something that, like, most of the time decay on these options happens in the final 2 weeks. Like, it really start dropping off. So what I want to do is I want to buy a put, and I want it cheap. So I'm going to put it slightly out of the money, the put. And I also want to roll it and keep it 3 weeks out. So I'm not going to go here because February 5th, I'm not even going to count that. 3 weeks out is going to be February 26th. And so if I put this on, let's go down. Let's look at the 11, maybe. We'll play with it. Maybe it's 11 or 11 and a half. I'm not sure. Yeah, let's change that to the 11 and a half. And let's make our range a little bigger. And now you can see that the graph resembles the Nike swoosh. And you can see here that if the price falls, not really getting hurt. However, what I'm going to call out is if the price falls, then the call that I have is going to be out of the money, and it's going to put me into a situation where carrying that is going to be incurring a time decay. So what I do instead is I actually, where that happens, I reset the trade. So I'll say that this falls down to $10. $10. Let's say it's 10. Yeah, let's call it 10. I probably have around a $40 or $50 loss there, but I may not, because these options may have increased in value. The put option may have increased in value enough because of the implied volatility that I don't actually have a loss. And then what I could do is I could take the exact same capital, and let's go out here, and I can roll my $13 call option down to $10. And I'll have the money to do it. And then what will happen is, so what will happen is that this 13 will get hit hard. This might be down $1, but the 11.5 put might be up $1, and so I'm still break even, and I'll have $4 to work with roughly. And if I'm not trying to like add or take away capital, but you could expect that this $10 call down here is going to be cheaper. It'll probably be around $3 or $4, and then I can I'll also readjust the put accordingly so that it's aligned like this to make a new swoosh. So as the price drops, I basically just reset it lower and lower. The downside to doing this is you do have to roll the puts. Otherwise, what happens is, like if we fast forward 1 week, let's look at 1 week out. Next Friday is when? What date? Next Friday is the 12th. So if we're rolling this put on the 12th, and I have a lot of tricks for doing that. So you can see that there is time decay on the 12th. So what I should have done and I didn't do was pick a date further out here before I started talking about these numbers. It would be if I bought it and then it right away fell down to 10. If it took longer and then fell down to 10, then I've got a little bit bigger of a loss. But the nice thing about the puts that we're talking about here is they're cheap relative to the call you're buying. So most of the money being put up, you can see here the bid is $470 for this combo and the ask is $494. Most of the money that I'm putting up for this trade, it would take most of it goes to the call. And so there is time decay on the puts normally. However, if the put becomes at the money or in the money, then the time decay starts coming from the call and not the put. So this is, because you're long two options, it's a pretty heavy time decay strategy. So you do need these things to be working for you. But the nice thing is, if it does fall down here to the 10.5 and I reset it lower, when the price comes back up, then I hit the nice stride, the right side of the swoosh from a much lower level. If the price just goes back to where it was, you can see where if we look at 4 points higher from this one, from 13, if we look at 4 points higher at 17, you can see that like there's a lot of profit that got made there. So if I reset this swoosh lower for free, when prices shoot back up, if they do, then we're in a profit zone, which is great. So it can be really profitable if the stock you're in rises. So anyway, that's the swoosh trade on ACB. I have one on GMC that I'm probably going to take that capital and rotate out of the I said GMC. The ticker is GM, and rotate it into ACB. And the idea here is I'm anticipating a breakout. When I look at the ETF, let me bring this up here, MJ. When I look at the ETF for the marijuana stocks, this looks great. It looks like, it's up a lot, but this is the kind of thing where it could run for years. Is my that's my best guess about what's going to happen here. All right, so the other thing I said that we would talk about is we would maybe quickly look through FinViz and make a watch list. So we get a FinViz window open, and oops. All right. Yeah, this isn't like premium or anything. If there's ads and that bothers you, sorry. So we're gonna go into the screener. All right, lots of ads. Well, they're getting extra bang for the buck on their ads now, huh? Okay, so this screener is fun. A tip I got from, I think it might have been Trader Stewie. See, he likes to look at his charts, the charts tab. So what we can do is we can actually sort it by, you can sort it by whatever column you want, and then flip it over to the charts view and it'll keep your sort. So that's really great. That's a helpful thing to know. And this lets you also look at a lot of charts at a glance. So let's put in some screens here on this thing. I'm going to look at large plus. I want optionable price. Let's go over $15. Let's go do some technicals. Let's see here. The tip I got from a friend was he said, why don't you use optionable and shortable, because that'll give you more liquid stuff, better candidates. If it's not shortable, maybe there won't be a short squeeze on it. So shortable is a good thing. All right. This A stock that's been running in here for a long time, I sometimes wonder, is it doing that because it's a ticker symbol A? I don't know. All right, so a really quick one that I like is these patterns. Looking through some of these patterns is fun. Wedge up strong. Now let's see how many we're looking at. I don't know how many pages are on here. Maybe I should subscribe to FinViz just so these ads don't keep popping up. Yeah, so only 3 pages here. And you can see they try and show you the wedge. They try and draw it on there. That's kind of cool. Let's do... Yeah, I don't really have a theme I'm going for right now. I'm just kind of playing with this. Let's look at bases. We were talking about head and shoulders pattern. Is there any head and shoulders? Doesn't look like it. Yeah, they're really monetizing this. They should. I mean, this screener is great. Wedge down. Some of these wedge downs can be pretty explosive. There's Bed Bath & Beyond. Or no, that's Best Buy. Yeah, nothing really jumping out at me. Let's sort by market cap, because then we can get... we can be focusing on the most liquid things. Okay, there we go. And I'm going to flip it back to charts, and you'll see that the sort order here, Baba, McDonald's, AZN, SMY, you'll see that order is preserved. So that's really good to know. It's nice. Gosh, go away. Here's Zoom, saying Zoom's in a pattern. I noticed that earlier. I was looking through. So far, I'm not really impressed with anything. How about ascending triangle? Let's look at that one. Ooh, Lowe's. Okay, Lowe's looks interesting. Gosh, look at Snap. That's running. Moderna. You know, this one kind of looks... I did a Twitter thread about Moderna, and it was right here. It was overbought. You can go back and look in December, and like it was like almost the top almost to the day when I tweeted that out. And it's just it had a big drop after that because it was just so overbought, and then it's on the rise again. And now it's flagging as a double top. It doesn't mean that it's going to top, right? It's just that what the computer thinks is the chart pattern. But yeah, this one could be a good one to get some puts on, maybe. We can look at that. So this is a brainstorming session. So was it mRNA? Yeah, Moderna. There it is. Let's get it open in the options trader window. It's kind of too late to put one on, day before expiration stuff. I like to at least have a gap in there to try and springboard into maybe a really big gain. I don't like buying them on Friday. On Friday, I'm doing different things. I'm focusing on any rolling that I need to do that I haven't done, and I roll before the last day. There's like I was saying earlier, on a lot of the puts on the swoosh, I'm rolling those. A lot of times on Friday because I want to roll before the weekend. But sometimes I'll roll if I'm adjusting it. I'll roll it out the put. I'll roll the put out if I'm already making other adjustments. Okay, where's the current price? Current price of Moderna is 171. So a 147 put looks like it's in the ballpark for the if we're going to do next day expiration or day before expiration kind of play here at DBE. Okay, the performance profile on this thing is these are too big of moves. Let's look at a 30% window. Yeah, this isn't really eye-popping, and I think it's because the implied volatility is so high. And so this might be a situation where it might be better to use a bear put spread. So let's look at one of those. Oh, you go to the combo builder, strategy builder, sorry. Okay. Yeah, see these options all collapsed today, and so doing a bear put spread on it today is no good. But it might have been really good yesterday. Let's just look at that. I mean, this is ridiculous. But yeah, look at that bid-ask spread. This is no good. Yeah, I don't like it. All right, well, let's keep moving. I'm not going to use the screener all that much longer. I think we'll end the broadcast because I don't really have a strong theme other than like I've already got a lot of stuff lined up that I'm looking at. And I showcased some of it earlier tonight. So my plan is to look through the screener this weekend more thoroughly, and I'll probably live stream that and for longer, and I'll try and think ahead about what things I want to look at. One more that I'll put on before we go is let's look at the stocks that are really close to their 52-week high. It's right here, 52-week high. 5% or more below high. So these are the stocks that are they could be really good ones to get in on, like a momentum kind of a move. If you're building a portfolio of stocks that are close to the highs. I mean, look at how many of them. The whole market's up. There's just so many. There's NVIDIA right there. So that one's popping up on this screener. That's interesting. And so if you want to get in at a really explosive time, this is a great place to find stocks that can be really explosive, because stocks can jump 10, 20, 30% out of, when they're at all-time highs or new 52-week highs. Here's Tesla on the list as well. Apple and Amazon. I mean, I'm not surprised. Facebook. Taiwan Semiconductor. This is really interesting because I've been watching this one all year, all 2021. And I thought about going into it. I never went into it. And part of what kept me out is the situation with changing from the presidential administrations. I didn't know if that's going to affect things in Taiwan, so I just stayed away because I haven't done a whole lot of research about how that dynamic might change and how, if any, effect it might have on Taiwan Semiconductor. But I mean, probably NVIDIA and some of these other tech companies, Apple, I mean, they may all be similarly affected. So the one difference with Taiwan Semiconductor is it may be that this is a company that could potentially get nationalized, whereas NVIDIA, I think they might, if they have a presence in Taiwan and there's some kind of a regime change there or something, or some kind of political instability, NVIDIA may lose their sources there, but I don't know that the company would get, NVIDIA won't get nationalized by some other country, whereas with this one, I don't know. I mean, it's you can see here the country of origin on the screener. And so a lot of times what I'll do is I'll filter out, and you can go to descriptive, and you can say you can filter on exchange, but you can filter on country as well. And I'll look at just U.S. companies sometimes, and that filters out Taiwan Semiconductor. Which that would be a shame, because this company's had such a great run. I mean, a ton of people made a lot of money on this one. It's huge. The market cap on it is huge. Like, it's bigger than NVIDIA. In fact, it's like almost twice as big as NVIDIA. So let's actually reduce it to U.S. companies. And you see here that now there's 23 pages, whereas before, when I had any, there was 29 pages. So you could be filtering out a lot of good opportunities to do that. It just depends on what thesis or what theme you have. You may want to be buying anything but U.S. companies. In that case, you could do this. You can look at the ex-U.S. So that's a really cool feature. I love that they put that in the screener. So anyway, now you're getting a view for some of the things I do with the screener. And you can quickly glance through a lot of charts. It's fun. It's a fun activity. So I'll try and do more of this weekend, and maybe I'll look ahead and try and figure out some themes and some screens that I want to show. And that's it for tonight. Thanks for watching.